What is going on, traders? Welcome to Celestin Capital. Thank you guys for tuning into this brand new video. Now, in this video, we're going to continue the MLBM series. And if you guys do not know what I'm talking about in this video, I suggest you go back and you watch the previous videos about the MLBM that I've made. All in all, to sum everything up about the MLBM, it's basically a new way of Wyckoff, a new way of looking at Wyckoff that I've created. It's a simplified version of Wyckoff, basically, which is where instead of having to label all the little parts of Wyckoff, let's say this is a distribution, instead of having to label all the different parts of Wyckoff, like the preliminary supply, the sign of weakness, whatever you want to call it, I simplify it so you look at it in a more generalized perspective, at a more generalized perspective. So instead of having to label every single part of Wyckoff, what you have to do is look for certain aspects of structure, right? So instead of doing that, you would do the M, which is the first M, which is the manipulation. Look for manipulation. Once you get manipulation, then you look for liquidation. As you see here, liquidation, let's just say this is just a wick instead of a candle that closes above this high. Let's say this is a wick up here. That's a liquidation. Then you look for the break of structure, which is what we're going to talk about in this video. Break of structure or breakout, whatever you want to call it. Break of structure or breakout. I like to call it break of structure. And I'm going to explain to you why I like to call it break of structure instead of breakout in a second. But you look for the break of structure. In this case, we do not get it. It does not break below this. But what we get here is a liquidation over here of this high, and then a break of structure. Once price breaks structure, you just look for the mitigation and a continuation down. So again, that is the general idea of the MLBM strategy. So let's hop into today's video. What I want to talk about is the break of structure aspect, the B in the MLBM strategy, which is the break of structure. Now, a lot of times, traders can get caught up in a pickle, and I say that because what basically the general idea of the market makers, the general objective of the market makers, is to liquidate people out of the market, is to make money. So a lot of times, especially with new traders, they get tossed around in the markets and they're not sure what is going on. They don't know why. And the reason being is because they're not focused on what price is telling them. So let's say we have some kind of distribution here. Let's say we have some kind of distribution. Or in this case, we have manipulation happening. So we have some manipulation happening, right? We have some manipulation happening. And let's say that within this manipulation, something like this happens, where price goes below a low, but it comes back up. What a lot of people will see is that price broke, what a lot of people would say is that price broke structure below this low. In this case, it's not the case. What we want to determine is whether price closed below or price wicked below this low. Again, what we want to ask ourselves is whether price broke below this low or whether price wicked below this low. When I say broke below, I mean the candle closed below this low right here. So was this a candle close or was this a wick? That's what we want to ask ourselves before we enter a trade, before we get confirmation of the MLBM strategy, of the MLBM that we're trying to use. So did price close below or did price wick below this low? Now, if price wicked below this low, we don't consider that a break of structure. We consider that a liquidation. All right. So stay with me. If price wicked below this low, it is not a break of structure. It is a liquidation. Now, if price closes below this low, it is a break of structure. Now, let's say this is just a wick. Price wicks below this low right here. This is a wick. Price wicks below this low. And then what happens? We get this move up. Now, this move up right here breaks above this high. So we consider that a break of structure. The candle closes above the high. So the candle wicks below the low and the candle closes above the high. Now, what would happen with a lot of traders is that they would be like, well, price can go either direction because it went down here and then it shot back up here. No, what we want to focus on is price action. What price is telling us. Because price did not close below this low, price is telling that price is telling us that it doesn't want to go below the low. Now, once we get this wick below and then this close above, this confirms that price potentially wants to continue higher. Price wants to go higher. So again, because price wicks below this low and doesn't close below it, it's showing us signs of rejection. It's showing us that price does not want to go in that direction. Now, what confirms our bias of price wanting to go up, or what may confirm that price wants to go up, is the close above, which this high does. Now, it's hard for me to show you without any wicks or candles, but we're going to hop into that in a second. But just get the idea get the general concept of what I'm teaching you guys right here before we hop into the live charts. Again, price wick below, price closes above. That tells us that price may want to continue to the upside. So let's hop into the charts and let me show you guys exactly what I'm talking about. So let's find some kind of manipulation. All right, so we have a manipulation over here. We have manipulation happening over here. So let's say we're right here. We have manipulation happening. So we have this high over here, right? We have this high over here. Or we can even extend this a little more. Let's actually do this. We have, let's say, this high over here. We have this high over here. Let me zoom in a little bit. There we go. Beautiful. So we have this high over here, right? We have this high over here. What happens? Price shoots above this high. Now, as I told you guys before, price did not close above this high. So it's telling us, it's giving us an idea that price does not want to go in that direction. Now, if price closed above this high, let's put this little thing here so you can see exactly what I'm talking about. Now, price does not close above the high. If price did, that would tell us that price probably wants to shoot up. Price wants to continue up. As you can see, price did not close above the high. Instead, price wicked above it. Now, this may fake a lot of people into thinking that price is going to continue up and they may hop into buys. This is what we call a liquidity grab. This is not a break of structure. This is what we're talking about today. This is not a break of structure, guys. This is simply a liquidity grab. What we want to see is price close below some kind of structure or close above some kind of structure. In this case, we're looking for sells, right? So we're looking for sells in this case. So I'm going to speak in terms of sells. I'm going to speak relative to what what our aim is. So we're looking for sells, and we see that price shoots above the high, but it doesn't close above. So that gives us an idea that price does not want to go in that direction. Price does not want to go up. Now, what confirms this downward bias would be a break below the low that you see right here. So this high liquidated this high. This push up, liquidated this high. And then what happens? Where's the low that caused the push up? This low right here. So once we get a break below the low, what do we see? We see the break right here. Why do I say it's a break again? Answer the question yourself. It's because price closed below it. You see a beautiful candle close. Now, let's say we were right here within price action. Let's say we were right here within price action. So we got, delete this. So we got the low right here, right? We got the low right here. Look what happens. Would you consider this a break structure? Absolutely not. Price did not close below this low. We want to be patient. We don't want price to toss us around in the market. We don't want to be tossed around in the market. We don't want to be whipsawed in and out of the market. All right. That's the last thing we want to do. We do not want that to happen. And what happens on the very next candle? This is where we see the break. this is where we can confirm that price wants to continue down. Now, if we were to take the sell from, let's say here, let's say we were to hop into the sell, wait for price to come back up and mitigate. What do we see? Let's see if price holds this high. So we're actually, well, it does hold high because I showed you guys earlier. But again, I'm teaching you guys break of structure versus liquidation. So in this case, we get a break of structure because again, price closed below. Now, price would have faked us out of the market if you guys did not understand break of structure. But because we understand break of structure, this push to the upside doesn't phase us. This doesn't tell us that price wants to go up. All right. So, and you want to be patient enough to wait for the candle to close. You don't want to just wait for this 30-minute candle to form, and when you see price pushing up, you just hop into buys, right? Because at some point, this entire wick right here was filled to the top. This entire wick was filled to the top because that's where price went. The wick shows where price was at some point. This entire candle was filled to the top. The entire wick was filled to the top. And then before, as you see, 30-minute, before the 30-minute hit, the 30-minute point hit, the candle came back and closed below. So let's continue to play this out and see if price holds. As you see, price does indeed hold. Price does indeed hold this high because again, we're looking for the break of structure. These wicks do not phase us. We're simply looking for the break of structure. Now, the break of structure down showed us that price wants to, again, hold this level. All right, so it's as simple as that, guys. If you have any questions, be sure to type them down in the comments section below. And yeah, if you guys understood the video, be sure to hit the like button and make sure you subscribe if you found this useful. If you feel like you could use this or implement this into your strategy, go ahead and do so. And be sure to hit the like button and leave a comment down below whether you are confused or not. All right, let me know what you think about this video, how it can improve it, and if it made sense to you. Let me know down in the comment section below. So again, break of structure, we want to see candle close below or above some point. So if we're looking for buys, we want to wait for price to close above a certain point. Let's see, buys. So you see this wick right here? There's a perfect example. Price would have faked us into buys, and what happened? Price dropped, right? So let's see if we can find a simple buy side example. Simple buy side example. You can see simply right here, price closes above this high, price continues to the upside. Now, there's not much, I don't want to go too deep into it, but you see price closes above this swing high, the price continues to the upside. So that's a simple buy side example. So again, if this video made sense for you guys, be sure to hit the like button and subscribe, and let me know down in the comment section if it did not make sense or what you guys thought about the video. So see you guys in the next one. Peace out.